Okay, good morning, everyone. On behalf of the Mass Mortgage Bankers Association, I would first of all thank everyone for joining us for part two of our Affordable Lending Summit series. We are very excited today to be joined by the Federal Home Loan Bank. And we have Shanda and Kaitlyn that have joined us. And I'm wondering, instead of me reading your bios, I'm wondering if you would each take just a minute of your our time and just introduce yourselves. Who first? Caitlin?
Sure. So, good morning, everyone. I'm Kaitlyn Mulhern. I oversee the Federal Home Loan Bank's homeownership grant programs. I've been with the bank a little over 7 years. So, this will be my eighth year doing down payment assistance. And before that, I worked at a small community bank in Dorchester in underwriting and operations. So, I speak everyone's love language here on the line today, probably.
Perfect. And there
Good
you go.
morning. I'm Shanda Pepin, and I work in the MPF program at the Federal Home Loan Bank of Boston. I've been here for about a year and a half. And before coming here, I worked for banks and credit unions in loan operations, mortgage servicing for over 20 years.
Wonderful to have you both. And just to let you know is that we are going to be handling questions at the end. So feel free to think about anything. You can ahead of time when it's on your mind, you chat, but we're actually going to have people come off mic and actually ask questions at the very end. So, all right, take it away.
Thank you. All right. All right. So just before I start, can everyone see my
Perfect.
screen? Awesome. Love it. So thank you so much for the opportunity to learn about our homeownership assistance programs and our secondary market. Like I said, I'm Kaitlyn Mulhern, and I oversee the down payment assistance programs. And my colleague Shanda Pepin is also on the call to talk about our secondary. We find these summits super engaging just because we know that the housing market is obviously very strained. There's a lot of challenges, and we want to be able to provide you access to our secondary market product, but then also increasing the homeownership affordability. And I think that's super important, especially in Massachusetts with the interest rate environment and obviously the home purchase prices. So I'm not going to get into about the material, but just start with what the mission of the Federal Home Loan Bank is. So if you do not know about the Federal Home Loan Bank or do, and maybe just don't understand the nuts and bolts. So we are a wholesale bank. So we are cooperatively owned by our banks and credit unions throughout New England. We have about over 400 and counting member financial institutions. That can be banks, it can be credit unions of all sizes, CDFIs, insurance company providers. And the Federal Home Loan Bank is a dual mission. So number one, we are providing liquidity and funding, which is a fancy term for saying loans. And some of our banks and credit unions that are on the call today are people who do borrow through our advances. And then because we are cooperatively owned and we also promote supporting financing and affordable housing as well as community development, because our earnings are generated by that liquidity, we then take a certain portion of our net earnings and we put it toward affordable housing and community development. So just to give you an idea, where we're regulated by the same government-sponsored entity as Fannie and Freddie, we typically are required by our regulation with the FHFA to put 10%. And I can confidently say this year, the Federal Home Loan Bank of Boston is putting 20%. So we are really committed to not only providing liquidity, but giving financial institutions access to a lot of these grant programs that we have at the bank. And that I will pass it on to Shanda, who's going to talk about the MPF programs, and then I'll kick it off at the end with our homeownership grant programs. So Shanda, take it away.
Thanks, Kaitlyn. So yeah, so excited to be here with you and share mortgage partnership finance is what MPF stands for. And basically what we're doing is we are providing our participating financial institutions with an alternative to sell into the secondary market. We offer both conventional and government loans, and we also offer products that stay on our balance sheet, as well as providing paths to sell loans to Fannie Mae or Ginnie Mae for institutions that don't have a direct relationship with them. Um, Next slide. So today we're going to focus a little more on our MPF 35 product. And this product is one that stays on the Federal Home Loan Bank of Boston's balance sheet. So we are purchasing these loans, and there is a risk sharing component with this product where depending on the different risk characteristics would depend on what your share in that risk would be. However, because you're sharing in the risk on these loans, we are also paying you an income as well. Next slide. What I'm really excited to talk about today is our permanent rate buy down product that's offered to our participating financial institutions. We were successful last year and have brought it back for 2025. And what we are doing with this is helping low income borrowers who have income up to 80% of the area median income. And we're doing that by offering a rate up to 2% below the market rate. So we're setting a rate that you can offer to those members. And we're also helping you as lenders, because when you would sell a loan into the secondary market with a rate up to 2% below market, you would receive a discount. We are actually paying a premium of on these loans. So we're paying 1015, and we're doing that through a board approved subsidy. Anybody that's looking to participate, the loans do have to be funded by December 31st, 2025. There's also some other overlays because we are looking to make sure that the impact is to those low-income borrowers that we're trying to help. Benefits to being a participating financial institution and specifically participating in our MPF traditional products are that you're using the same credit expertise that you have in your shop. You're making the decisions on the loans that you're going to sell. We offer a competitive execution for our conforming loan sales. And one of the big things is that we don't charge any loan level price adjustments. You would use your same standard underwriting and servicing processes. And another thing that I think makes us a little unique too is that you get support and training right here from your Federal Home Loan Bank of Boston staff. And then, as I indicated, we're also paying an income based on the performance of the loans that you sell into us. There are no minimum loan sale requirements. So if you were to apply and become a participating financial institution, you're not obligated to sell a certain number of loans. We offer both servicing retained and servicing release. And I have here our website, FHLBMPF.com. This is a site where you can definitely obtain more information on the programs, but of course, you can always reach out to me if you're interested in, having that alternative or, participating in the permanent rate buy down as a participating financial institution, because it is limited to those that sell into our program. And Jennifer Coles is the program manager for the MPF program here in Boston. And then I work alongside her. We actually also just added a third person to our team, Alex Francione. His contact information hasn't been updated here. But for those who might be a participating financial institution, you'll be seeing his name, and we're happy to help with any questions that you may have. And with that, I'm going to turn it back over to Kaitlyn.
Awesome. Thank you, Shanda. So the Federal Home Loan Bank has a suite of homeownership assistance programs. I'll start with the first, which is our oldest program. That's called the Equity Builder Program, or EBP for short. So this is really serving the low to moderate households that are at or below 80% of the HUD area median income. This is our regulated program for low to moderate income households. It's been around since 2003. And then because New England is definitely in a cost burden location, the bank in 2019 uh, added a voluntary program called the Housing Our Workforce, or HOW for short. And that's for slightly above that 80 and up to 120% of AMI. And this is really to capture that missing middle that potentially might be over that 80, but they really do need some sort of down payment and closing cost assistance. And then lastly is Lift Up Homeownership, or LUH. So that is our newest voluntary program. It started as a pilot in 2023, and it's now been added as another voluntary program. And that is serving at or below 120% of AMI, but it's also for specifically people of color or first generation home buyers. So they only have to self-attest and certify with our documentation if they're either one of those. And that really is to close the wealth gap and the racial homeownership wealth gap, especially in first generation who maybe don't have the banker mom and dad. And we did just recently expand to the first generation component in this program. So either one of those, in addition to our income eligibility requirements. And so, how do these programs enhance affordability? The one thing I want you to take away is that they're forgivable. There's only a 5-year retention period. You do not have any P&I for your customers. They can refinance as many times as they want, whether it's a rate and term, if they want to do a cash out. We promote equity within the home, so even if they're doing, a home equity line of credit, this is really just helping to build equity and wealth through home ownership. We talk a lot about the importance of having that equity, whether somebody wants to start a small business, they want to send someone to college, this is hopefully the way to introduce that for people who are aspiring to own their own home. And then when it comes to the flexible requirements, so similar to MPF is that you are originating that first mortgage. So you're seeing the full scope in your underwriting. These are income eligibility based programs. So things that we don't look at assets, we don't look at FICO score, we don't look at loan to value. It really is who is going to live in the home and all household incomes. So we always just tell people treat this as an additional underwriting layer and just realize that we're compliance income. So there are some other programs throughout Massachusetts that you might participate in, Mass Housing, MPF. So, just really treating that as an extra layer to ensure that the enrollment reservations meet the spirit of our programs. And then lastly, layering these with multiple programs. Massachusetts is so fortunate to be able to have all of these different down payment assistance subsidies, forgivable grants, whether it's, state housing finance agency or municipalities layer our programs. And one thing about our grant programs is we'll sit in any lien position, so we're not lien sensitive, and that's awesome because sometimes we'll see, 4 different products in front of us, and we'll even be in fifth position, and we're fine with that. And if anyone ever wants to refinance, they can, continue to subordinate. Like I said, we really just promote that equity. And this QR code actually will take you to our home buyer flyer. It has all 3 of our programs. It doesn't have any opportunity for your marketing material, but if you do any home buyer seminars or any other community events, feel free to use this flyer that is a PDF, and it does have a lot of great frequently asked questions for first-time home buyers, and it really breaks it down for them, because I know as a banker and a lender, sometimes our jargon is a little confusing and it's overwhelming. So we're just trying to make the process where we are wholesale as palatable for first-time home buyers, because it can be extremely intimidating. So our grant programs do have eligible use requirements, so they can be used, all 3 of them, for down payment and closing cost assistance. And that closing cost breakdown does include prepaids and escrows. You can use our programs to buy down up to 2 points. Just noting, if you do layer this program with the MPF permanent rate buy down, you can't double dip. So you can use our programs, you just wouldn't be able to use the grant for an additional 2 points to reduce that interest rate, but you could apply it to down payment and closing cost assistance. And we're seeing a lot of lenders inquire about that, just to really increase affordability. But also, more importantly, I like to tell people it's a one-stop shop. You get hold of myself and Shanda and all people from the Federal Home Loan Bank, so you get that really more customized customer service and technical assistance. It does have to be a home purchase within New England, and our property types for our grant programs can be 1 to 4 families, condos, townhouses. The condos, we don't care if they're warrantable or not. So, however you're underwriting your loans. We have been seeing some cooperative housing, some modular homes, and manufactured housing. So we're really trying to cover all those property types in New England. And then I'm not going to get too in the weeds with comparing the programs, but I did already highlight the area median income limits. I did also include that the Lift Up Home Ownership does have a people-based element. So there is a self-certification in addition to our typical down payment disclosures, which are basically our Fannie Mae 1003. The grants for this year for the Equity Builder program and the Housing Our Workforce, it's up to 25,000. If anyone's used the HOW program in the past, we used to have a 10% sales price, lesser of the two, and it's just a flat 25,000, just to be able to streamline and simplify that. And then Lift Up Home Ownership is still up to 50,000, and that really is to promote the wealth gap and home ownership gap for first generation and as well as people of color. The down payment requirements are a little different, and that is based on their income eligibility. So for EBP, it is a low to moderate income, so that's $500. How is 2,000, and we did remove that overlay of 1% of the purchase price. We just streamlined that for this year, and then the LUH is 1,000. It does have to be the home buyer's own funds. It can't be a gift. If they received any other gift money or gift of equity, that's fine. We just need to have the home buyers have some sort of skin in the game. And then if they are a first-time home buyer, they do have to complete the first-time home buyer education and counseling, whether it's through HUD or CHAPA. We have a bunch of resources in Massachusetts, so it's great. And they can do that hybrid approach if they want to do the online education through one of our approved agencies, and then they can do it pre or post closing. So those are just some things I wanted to highlight regarding the comparison of the 3. And I will be sharing this resource. I feel like it's super helpful for your internal underwriting and origination staff. So here's a success story, because it's great to talk about these programs and we give statistics, and that's all and good, but there are real beneficiaries that actually are tied to these grants, and I think that's something that's wonderful. So last year, this is actually a single mom who was able to purchase a home in Massachusetts. Before that, she was renting and she was unable to buy in the Boston market. And so she did have to move a little bit south, which, she was really happy because she was living in a one-bedroom apartment and she was able to buy a two-bedroom single family so her daughter could have her own room. Her household's income was around 65%. She got one of her equity builder grants. And then also, I believe she did layer some other monies into the deal, but specifically with our money, it was used toward down payment and to alleviate that monthly P&I about $157 a month. So we know every bit counts. It's super important. And this is really why we do what we do. And then I did mention before that you can use our DPA programs in conjunction with MPF. We just want you to be mindful that there are some differences in our programs because one is affordable housing and one is on the secondary side that is sits with all of the federal home loan banks and originates from Chicago. So we do have this QR code that does have a matrix. It does show you the differences between the programs. If you ever have questions, you can reach out to Shanda and I, as well as Jennifer. Feel free to email us. We all really work together to make sure if you are going to use all of these programs together that you have all that information up front. But just to highlight some things is that I talked about how the down payment, we don't have any loan to value restrictions. MPF does at 95%. And then just remember if you are using the permanent rate buy down that you can't use the grants to kind of double down on that interest rate reduction. And then here is our homeownership team. We do have a lot of resources on our website. We have a ton of materials and documents. If you ever need technical assistance in our platform, one thing I just want to call out to this team, particularly all the analysts, they created a whole YouTube channel that gives you all these quick sound bites of how you would enter a loan. It goes through the income calculator, how do you enroll home buyers, the whole gamut. So we just really want to make sure that we're there for you, especially where we do have a lot of volume, and make sure that you have all the information that you need. And with that, we, I guess, could pause for some questions, Debbie, because that's a lot of info, but we really want
Yes,
to hear from you.
please. So I have a question to get you started, and people can come off mute. They can put their question in chat if you're shy. There's been a lot of talk about non-citizenship. Um, how are you underwriting to people that aren't U.S. citizens but might have a green card, or how are you tackling that?
I can start with the grant program. So our income guidelines do kind of point to how Fannie Mae would do theirs just because we're really not seeing the full scope of the grant. I mean, of the mortgage, we're really focused on the grant and the beneficiary. However, I will say that we have had situations where maybe it's not eligible with Fannie Mae, but an institution might say they're going to keep it on their portfolio. They have the documentation. Because, like I said, we're not looking at credit, so it could be, you doing a manual underwrite, you could be doing alternative credit. We're not looking to disparage anyone who has a different loan product. We just use Fannie as kind of our benchmark where we're not doing first mortgages. So hopefully that answers the question. But yes, we've gotten a lot of questions about that. Shanda, do you have anything to add with the MPF side on that?
Yes, so I mean, we do have a full selling guide that needs to be followed for all of the loans that are sold into our program. But you can be a U.S. resident, a non-U.S. resident, permanent alien. You basically need to have a social security or an ITIN.
It's awesome.
Yeah,
Okay, are there other, because I'm going to keep on going.
we love it.
Okay, all right, next question. Do you ever run out of money? Like, how do people reserve? How do you know that, hey, I want to do this and I want to combine it with this? And how do you coordinate all that?
So I'll start with the grant programs. So because we have all three, this year is the first year we've been able to deploy the same funding release schedules for all three, just because you might not know what program your buyer is in, especially if you're still in the infancy stages of pre-qualifying or working through that loan application. So we kicked off money on April 1st, and we have money through July. So we're releasing money for each program the first business day and then mid-month, just to make sure we're being thoughtful to when closing dates are. Yes, we do run out of money. That is a common thing, at least since I've started operating these programs for the last 7 home buying seasons. I can say this year, though, because I mentioned in the beginning that the federal home loan banks have been only mandated to do 10% of our earnings. We've doubled that. So we have a very healthy pool of money because our board of directors and our institution, we're super committed to affordable housing, especially in home ownership. So we do have a lot of money in all three programs, which is great. We've also been doing some things to kind of mitigate and slow down the depletion of funds. One thing is that we've instilled graduated member financial institution limits and caps because the money is never guaranteed. It is first come, first serve. So that's been super helpful. We're also all of New England, so we've also done a state by state allocation. And then once there's money maybe in some other states, I can say that Massachusetts immediately wipes out because that's most of our banks and credit unions as a membership. But any money that's left over in other New England states goes over to the general pool. So we've been trying to slow down that pace and then try to be thoughtful to that. But every year the money can look different. So that's kind of why we have to slice and dice things a little different. We try to do some analysis, and we also, more importantly, we've been doing a lot of outreach with institutions all throughout New England. We've done 9 road shows as the housing community investment alongside the MPF team, and we hear all the feedback, we implement it. So yeah, hopefully that's a very long-winded way to answer, but we get a lot of inquiries about that topic.
Yeah, and for the permanent rate buy down, we of course also have that board approved subsidy. So, it does run out, but that's the goal, is to use it all, right? Um, so how we have our PFIs, our participating financial institutions, um, reserve those subsidy funds is by taking down a delivery commitment. And one of the things that we've done, because our delivery commitments are a mandatory delivery, is for low income borrowers, if that loan can't close, we also will refund pair-off fees, because we don't want the participating financial institutions to be hesitant about taking down a delivery commitment, because that is truly the way to reserve those funds. We've also implemented a cap, at least for the first 90 days. Our 2025 permanent rate buy down product went live on February 13th. And so for the first 90 days, we have a limit to the number of loans that each participating financial institution can sell into the program. And the reason for that is because we want to give all of our PFIs an opportunity to participate in the program, regardless of, your size and all of that. We want you to have a share in it.
Okay, who else? Who else out there? And if you have success stories, or you can share them, absolutely.
Oh,
You
we
can
love
come
that.
off. We do, or how you use it, how in this, how you market, the grants and the programs to your first time home buyers. We would love to hear about that. I mean, I know that I am blown away where, condominiums, you're taking non-warrantables. And I think that's a huge, huge advantage to those first-time home buyers.
Oh, absolutely. I think the importance for the grant especially is because we're really looking to the lender who's doing the first mortgage. So if you're comfortable with it and however whatever product you're using, we really just care about that income eligibility. And especially in Massachusetts, when it comes to the purchase prices, condominiums might be a little bit more palatable. We've seen a lot this year with like condominiums that are also in deed restricted or they have 40B covenants. That also just increases affordability. And I think it really is just kind of we know we're short of housing. We keep continuously hearing from the state that we have to build more homes, and we have the oldest housing stock. So I think just kind of meeting people where they are and what's available, like, we should be doing that. So.
Yeah, and I just want to clarify on the MPF side, condos would need to be warrantable. So you would still have to follow the selling guide as you would for any loans that would be sold into the program. As I mentioned earlier, there are some overlays, including like it's for purchase transactions only, for example. And, we use all income and things like that. Um, but it's still in addition to those overlays, still has to meet all of the requirements of selling a loan into the MPF program.
Good information. What else? Anyone? Sarah, I see you do you have any comments, or Sean, or I know I'm pinpointing people.
I know you are. It's okay. I had to take myself off muted, Sarah. I don't. I thought this was an excellent presentation and lots of information. And Deb, I did see that you would send this presentation out to those who registered today, so that would be fantastic.
Yes.
I think there's some great things that I learned today as well. Thank you.
You're welcome.
Yeah, and I
Sarah,
just want to, oh,
I was going to say Sarah is a co-chair of our education committee, and I think I hear Sean's voice, who is the other co-chair of
yes,
the
that's
education
correct.
committee.
Yes, thank you, ladies. That was great. I know as a company, Washington Trust, we've taken full advantage
Yes.
of the DPAs or the grants. And I would just say that the best way to go about that is to set proper expectations and not overpromise and underdeliver, because we know that you need to be under contract. You still need to fill out all the forms and you still need to fit the criteria in order to get the funds. So you kind of have to have the ability to still make the transaction work without guaranteeing the funds ahead of time. But yeah, no, it's been a great program. I know we've taken full advantage of it. The funds go fast, though, from what I understand.
They do. Thank you for saying that, Sean. I think the other thing too, I just want to kind of also add to piggyback on that is we really see a lot of success, not just in larger banks, but even credit unions. And I really think it comes down to being mission based. I'm very passionate about homeownership and affordability. So having people in your institution that are not just seeing these as loan numbers and transactions and really knowing that it has a beneficiary and it's not necessarily cookie cutter underwriting. I really don't think we see that anymore. There's a lot of complexities and just really kind of taking that and just, working through the logistics and setting those expectations, I think also like just sets your institution up for success.
Hi,
And
sorry. I'm Carla Parodi. I work for Fidelity Bank. I want to say that we've had at least four successful stories. And I want to say thank you for your team because you're always very responsive when we have questions. And I love the presentation, so thank you very much.
Oh, thank you, Carla.
thanks, Carla. One question that was in my mind, and so if you applied for all of the above for one loan and the funds ran out, but you still had room for, say, the 2% subsidy, is that okay? Can you just proceed with whatever is available? You don't have to combine a loan with everything.
I mean, it would, of course, the borrower would have to be would have to qualify for the loan based on the programs or the
Mhm.
down payment assistance, or if without the others, if you were trying to get them into multiple things. Um, so they do need to still qualify for each uh, product. So, for example, if you wanted to pair a down payment assistance program with the permanent rate buy down, they would have to separately qualify. And if it qualified for one and not the other, for example, if they qualify for the permanent rate buy down and maybe say they didn't receive down payment assistance funds, they would have to still be able to qualify for that loan without those down payment assistance funds, technically, but they can be paired, but they don't have to be paired.
And then also just to add, so for the three suite of grant programs that we offer, a household is only eligible for one, so they can't have all three. And also, if they have received one of those grant funds in the past, our procedures do have that detail that they can't benefit from the future programs, and that really is just to be able to kind of share the love, if you will. We see people who are not using the permanent rate buy down. We see a lot of institutions that are using mass housing. They're using MHP1 mortgages. They've also expanded. We're seeing FHA, we're seeing VA, ARMs, jumbo loans, conventional, like you name it. We're fine with that. So we're not saying that you just have to pair it with our MPF program. It's really what does your customer qualify for, and how are you going to make that first mortgage sustainable for them?
That's great. Any other comments, questions from the audience? Okay, I don't see anything in the chat either for those shy people. So on that note, I think we will thank the Federal Home Loan Bank, specifically for Shanda and Kaitlyn for being with us. This is being recorded, and so we will send out as best we can both the recording link as well as the PowerPoint. So thank you so much. And our next program is going to be May 6th with Mass Housing. They have some exciting new news for you mass housing lenders. Exciting new news that came out yesterday that we'll be talking about. And we also will be having down payment assistance on May 8th. And we are still scheduling HUD and FHA and the MHP sometime later in May. So, on that note, thanks for joining us. And we will see you on May 6th.
Thank you.
Thanks,
Thank you, Debbie and
everyone.
everyone. Have a
Thank
Thank
wonderful
you.
day.
you.
Thank you.